Welcome to Institute of Banking Excellence. Today we are going to talk about RBI measures for COVID-19 Part 2. Before starting the video, if you like our videos, please press the like button, subscribe to our channel and share it with your friends. Don't forget to press the bell icon so that you can get daily notifications whenever we post a new video. Without wasting much time, let's get started. RBI measures for COVID. RBI has announced, on the 27th of March 2020, following measures to counter the effects of COVID-19 on Indian economy. 1. Repo rate cut by 75 bps to 4.40% from 5.15%. 2. Reverse repo rate cut by 90 bps to 4.00% from 4.90%. 3. CRR reduction by 1% from 4% of NDTL to 3% of NDTL. 4. Targeted long-term repo operations providing banks loan at repo rate for investment in corporate CP, CD etc. Effects of RBI measures. The measures are likely to affect Indian economy, Indian corporate and Indians public is under. 1. Repo rate cut will have two-pronged effect. A. Retail loans, housing loans, MSME loans are linked with benchmarks, and with reduction in repo rate, the interest rate chargeable on these loans will get automatically reduced, providing relief in interest cost to the borrowers. B. Rate directly affects the yield on government bonds. The reduction will lead to decrease in yield on bonds, which means higher prices. The higher prices will lead to appreciation of investment in the books of banks, thereby saving banks from providing depreciation. 2. Reverse repo rate. This is the rate at which banks lend their excess funds to RBI. Due to reduction, the banks shall be less inclined to park their funds with RBI and instead lend it to public or corporates at cheaper rate. 3. Reduction in CRR. CRR is the amount that banks keep with Reserve Bank of India. As CRR is reduced, banks will have funds freed from this obligation, and the freed funds can be utilized to fund the corporates public. This shall take care of cash shortage created due to supply chain disruption etc. 4. Targeted long-term repo. The RBI is providing loan to banks at repo rate which is 4.40% with condition that banks shall invest these funds in CP, CD etc. provided minimum 50% investment is made in fresh issuance. This is again targeted to meet the cash shortage with corporates created due to COVID disruption. Further, in order to give relief to public at large and banking system from oncoming stress on account of lockdown, the RBI permitted A. Deferment of repayment of term loan by 3 months. B. Deferment of interest on CC owed by 3 months. The measures are likely to provide relief to persons whose salaries, wages, perks etc. have been affected adversely due to COVID-19. Relief measure for exporters. The RBI, continuing its efforts to curtail the COVID effect, has announced following relief measures for exporters on the 1st of April 2020. Extension of realization period of export proceeds, extended from 9 months to 15 months. Effect. Currently, if an Indian business enterprises person has exported goods, services, the proceeds shall be realized and received in India within 9 months of sale. The same has now been extended to 15 months. Since most of the countries are affected by COVID, exporters are facing problem in ensuring that funds of their exported good, services are brought back within given time. This is it for this video. Thank you so much for your love and support. Stay tuned for the next one. Till then, bye and stay blessed.